Market surge and investor confidence following election. When Donald Trump won the presidency, investors saw a powerful initial boost to the stock market, underscoring a renewed sense of optimism. That 2% surge in the S&P 500 wasn't just a fleeting reaction, it represented a shift in investor mindset. Investors were drawn to Trump's pro-business policies, and his approach towards cutting regulatory barriers resonated with the corporate sector. This confidence has the potential to cultivate a stronger investment climate, encouraging more capital to flow into equities. A stable outlook and renewed faith in a business-friendly administration could well translate into sustained market growth. Election cycle patterns and market rebounds. Historically, markets are often volatile before an election, as investors wrestle with uncertainties. Yet, once the results are in, there's a pattern: markets tend to bounce back as stability takes over. Trump's election brings renewed hope to this cycle. His administration could trigger a rally as investors start to trust in a predictable, growth-oriented economic strategy. With a proven cycle of rebounding after election day dips, Trump's victory might create a similar rallying effect, setting a foundation for upward trends. Investors may be encouraged by this track record, betting on a bullish cycle that aligns with past election patterns. Corporate tax cuts and profit growth. One of the most eagerly anticipated policies under Trump is the reduction in corporate taxes. By potentially lowering tax burdens, companies could see higher profit margins, providing additional funds for investment, expansion, and innovation. This policy might especially benefit publicly traded companies, as greater profitability often leads to higher stock prices. With an eye on bottom-line improvement, investors may perceive the market as more lucrative. This optimism could lead to more consistent gains, fueling a cycle of reinvestment that supports both the stock market and economic health. S&P 500 and key support levels. Since Trump's election, the S&P 500 has climbed back above significant support levels, a positive indicator for future gains. When key indices hold above these critical points, it signals resilience and potential for growth. This support level may act as a foundation for further upside, aligning with Trump's anticipated economic reforms. The market's ability to hold these levels could instill confidence, encouraging both retail and institutional investors to look at the broader market with an optimistic outlook. Holding these levels will likely become a benchmark of stability, inspiring investors who believe in Trump's vision for economic growth. Impact of low oil prices and disinflation. Low oil prices and current disinflationary trends have been friendly to the stock market. As Trump's administration works to boost domestic energy production, the likelihood of sustained low energy costs could continue to support market growth. Lower operational costs for businesses can lead to increased profitability, directly benefiting stock prices. With disinflation, there's also less pressure on the Federal Reserve to hike rates aggressively, meaning that borrowing remains accessible. Investors may feel reassured by this low inflation environment, confident that market growth can continue under these conditions. Small-cap stocks surge and investor appeal. Small-cap stocks, often overlooked, rallied sharply after Trump's win, with the IWM index gaining 6%. This surge reflects investor enthusiasm for domestic, smaller companies poised to benefit from Trump's economic policies. Small caps tend to respond more favorably to reduced regulation and tax relief, both anticipated under Trump. With relatively lower valuations, small caps present a growth opportunity. This sector may continue to attract investors eager for higher returns, adding diversity to the stock market's upward trajectory. Long-term uncertainty and economic challenges in 2025. While the short-term outlook appears bullish, the future beyond 2025 remains uncertain. A potential decline in job openings and looming economic challenges serve as reminders of market cyclicality. Investors can remain optimistic for now but stay vigilant about market signals. Trump's policies may pave the way for growth, but a balanced approach, with diversified investments and an awareness of potential risks, is key. The goal is to make the most of this window of opportunity while preparing for any shifts in the economic landscape. And here's the key takeaway from the channel: delve into financial education to enhance your quality of life. Within the financial market, explore bonds and shares, particularly focusing on real estate investment trusts, which offer the potential for passive income. Engage with this responsibly and consider reputable investment brokerages worldwide.